Hello, my name is Lindy Jung. I am a soon-to-be traditionally published science fiction and fantasy author, and my debut novel, MOTHSBLOOD, is coming from Bloomsbury in the US and Rey in the UK in fall 2026. Welcome or welcome back if you have been here before. I'm going to jump right into today's topic. This was requested in the comment section and also in my Q&A Google form thing a couple times, and yes, today we are going to be talking about author finances. Before I start, I do want to give the caveat that I am in traditional publishing, which is going to look very different financially from like indie publishing, self-publishing. We'll talk a little bit more about those differences in the video, but really only to illustrate how they're different and not so much give advice to indie authors. So if you are a wonderful indie author friend looking for indie author financial advice, this video probably isn't going to be incredibly relevant to you, but I hope that some of my bigger takeaways, like, you know, how I manage taxes and how I manage the money that I do get from publishing, those might be a little bit more interesting. So you can skip to part 3 if you're interested in that. Otherwise, you know, we'll see you next time. The other disclaimer is that I am by no means a financial professional. Like, please do not take this as personal finance advice. I don't know you. I don't know your situation. Anything could happen. I could go bankrupt next week. Please take everything I say with a grain of salt. This is entirely based off of just my personal experiences. Again, it is not a substitute for financial advice. So if you're looking for personalized, professional financial advice, I do have some tips on how to find that in the rest of this video. Okay, final caveat. I promise it's the last one. I am based in the United States and I am a US citizen, so all of the tax information and that kind of stuff is going to be US specific. I'm going to be honest, I have no idea how taxes work in like Canada or the UK or anything like that, and within the US, there are some very specific challenges we face as self-employed persons as well. So yeah, I think that should more or less cover all of the disclaimers and caveats. Let's talk about money. So, part 1. Where do authors get their money? I think most people have an idea of how like indie authors make their money, which is that, you know, they pay up front kind of the costs of getting a cover, getting editing, maybe putting the book to production, and then every time they sell a copy of their book, they get a certain chunk of change in return. But for trad authors, money does work a little bit differently. In trad publishing, the general rule is that money flows toward authors. You're not going to have any upfront costs unless you choose to go for an editor that you pay for and that kind of thing. That's more of a personal decision. But generally speaking, you're not paying for your agent, you're not really paying for your publisher to do anything, which if you're pursuing tradpub, do not pay a publisher any money. And in traditional publishing, generally speaking, authors are going to get their money in 2 forms, and that is advances and royalties. So advances are what they sound like. They are money that is put forward by the publisher in advance to purchase a book. So when you get an offer on your book after going on submission to editors at publishing houses, the publishing house is like, hey, I want this book, here is the advance amount I will offer. This can be anywhere from like $1 to several million on the upper end, which of course that's a unicorn number. I've never seen that kind of money. I think it's very, very unlikely that most debut authors would see that kind of money. An advance is really nice because it's money up front. You don't have to return it, even though it is called an advance. Even if your book doesn't earn out, which we'll talk about in a second, that's money that you get to keep as long as you turn in your book. Generally speaking, if you have a literary agent, which you should if you're pursuing traditional publishing, publisher is going to offer a certain amount for the advance and your agent is going to try and push that number up as much as possible. It's really, really hard to kind of guesstimate what kind of advance number is normal or typical. I think based off of like anecdotal evidence alone, if you're a debut author selling one book, probably around like 10 to 30,000 US is going to be a typical advance. But of course, this is going to depend heavily on like genre, on marketing potential, like if it's a trendy topic or subgenre, that's going to change that number a little bit. If, you know, someone at the publishing house just really randomly decides to love your book and they're high up enough to offer $1 million, that could happen too. Anything can really happen. At advance numbers, I think people try to use them as a metric of like how well their book is going to do, and I just like, publishing is so unpredictable that you can't base everything off that single number. Although I'm not going to pretend it doesn't have an effect. It is a representation of how much faith your publisher has in your book, making them money. But again, they don't know everything, you don't know everything, we cannot predict the future, so don't stress too much about your advance amount. The tricky thing about tradpub advances is that they do typically get split up into like 2 to 4 payments. These are paid out at different landmarks. Generally speaking, what I've seen for, let's say, a 4-payment structure is going to be payment upon signing. So when you actually finalize and sign your contract, you're going to get your first chunk of change. So let's say you have a $100,000 advance, you'll get $25K upon signing. And then your next chunk of change is going to come when you deliver your book and it is accepted. This is called D/A sometimes, and it's when you turn in your final version of the book after edits with your editor before copy editing, and the editor accepts your edits. So that would be $25,000 at that second point. The third point is generally upon publication, so your book goes out to market as hardcover or whatever format it's being published in for the very first time. You get your third chunk of change. And if it's split into fourths, I think it's usually a year out from initial publication or upon paperback publication. This time frame can be anywhere from like 2 to 4 years. So that means that $100,000, although it sounds like a really big amount, gets spread pretty thin. I'm gonna go ahead and break that advanced timeline down a little bit more just to make it clear. So again, going with 100K because it's an easy number and, you know, we're writers, not mathematicians. Let's say you sell your book today. It's August. You sell your book today for publication in spring of 2027. So that's about 2 years out from now, give or take a couple months. You end up signing your contract in October 2025. 2 months of contract negotiation is pretty normal. It can go even longer. I've heard up to 6 months. I've heard up to a year. You can expect your first deposit in about a month. So let's say November, you get your $25,000 and then you edit. You've been editing since August with your editor, even before contract signing. Usually 4 to 6 months for all edits. So multiple rounds of edits is a pretty normal timeline. So if it's August, let's say 6 months to be safe, you're looking at delivering your final-ish version of the book in February of 2026. Another month, so you'll get your money probably in March of 2026 if everything goes well. And then your book obviously publishes either March or April or May 2027. So let's say you get your third chunk of change in May of 2027. And then a year out from then, you get your final $25,000 in May of 2028, 1 year after you publish initially. From 2025 to 2028, that's a 3-year timeline across which $100,000 is spread out. On top of that, your agent is going to take a very, very well-earned, don't get me wrong, 15% off every check. So $15,000 of your advance is going to go to your agent. If you get 100K, that leaves you 85K. And then we're going to get into taxes, but usually you can expect to pay anywhere from 25 to 33% of your income on taxes. That's after your agent's amount gets taken away, so that's helpful. And that's how advances work. So now let's talk about royalties. This I know a little bit less about because obviously I am pre-publication. I haven't gotten any royalty statements, and I won't for a while if I ever get them at all. And you might have heard that it is very, very difficult for traditionally published authors, especially those with like larger advances, to actually earn out enough to start making royalties. And that is because you have to earn out your advance before you start seeing money from book sales. So what that means is, going back to our $100,000 example, you have an advance of $100,000. You have to earn $100,000 back in order to start making a percentage off of each copy sold. So let's say that your agreed upon royalty percentage is 10% on every hardcover sold, right? That's going to be in your contract. Hopefully your agent can like bump up that number, but usually the publisher has a pretty standard royalty percentage. You will earn $3 off of every hardcover sold if your hardcovers are selling for $30 US, but you are not going to get that $3 directly. You have to sell 33,333 copies first before you start getting $3 per book. And that is because you need to earn the equivalent of $100,000 in your royalties. So it's not just like $30 for each book. Once you sell $100,000 worth of books, you have to sell $100,000 worth of your royalty percentage, if that makes sense. So that's where the 33,333 hardcover copies number comes from. And that's a pretty big number. And this is why some people also say that larger advances can be a bad thing, because it's that much harder to earn out and to start generating that income through royalties. But regardless of whether or not you actually earn enough to earn out your advance and start making royalties, I think most publishers generally will send out some sort of royalty statement or a royalty check each quarter, or I don't really know, I don't want to say that for sure, but a couple times a year you're going to see some sort of statement that tells you how close you are to earning out, how many copies sold, that sort of stuff. Of course, it's not all bad if your publisher acquires world rights, so they acquire the right to sell your book, distribute your book across the entire globe, and they end up selling to foreign publishers. The amount that they sell your book for, that advance amount, will go toward your initial, let's say, US advance. So for example, you have a $100,000 advance from your US publisher. They sell your book to a French publisher to translate it and distribute it in France for I don't know, $10,000. Now that goes directly toward your advance. So you don't see the $10,000 directly, but it helps you get a little bit closer to earning royalties on your books. Part 2, the big T, aka taxes. So whether you are indie or trad, as an author, you are considered self-employed and you're going to have to pay taxes if you live in the United States. For most places, this is federal tax and state tax, so we have 2 separate brackets of tax. Some states, of course, do not have state income tax, so you would be a lucky duck if you live in any of those places. Obviously, as authors, even if you are working with a publisher, they don't typically have a W-4, they don't withhold any of your income for taxes, so you're going to have to pay that money to the state and the government directly. Also, because you're considered self-employed in the United States, there's something called quarterly taxes. So instead of paying once a year, you pay estimated taxes every quarter. There's also an option to, if you have like a regular day job that does have a W-4, you can get additional money withheld from your paycheck from your regular day job to cover your self-employment taxes. But because like writing income is so mercurial and really unpredictable, I just wouldn't recommend that, especially if you're making like more money from your writing. Like, I'd rather just pay the quarterly taxes than deal with guessing how much I want withheld from my paycheck, which I would want to rely on for more like real life stuff. But let's talk about estimated taxes. They really scared me at first. Like the first time I realized I had to do them for YouTube, I got really nervous, but you only really have to do them if you make a certain amount. I think the threshold is like $2,000 in a year, and you do pay them 4 times a year. So that is one payment in January, April, June, and September, usually in the middle of the month. There are specific dates that these are due that I don't know off the top of my head. I'll put them here. I would highly recommend marking them in your calendar so you know when to do them. And I would also recommend paying your tax like a couple days in advance. I usually pay through the IRS app. I find that really convenient, if not incredibly UI friendly. I'd rather do that than deal with the hassle of like paper checks and that sort of thing, but that's an option as well. So the purpose of estimated taxes is to basically estimate the amount of taxes that you'll owe by the end of the year and pay them in advance. And then when you fill out your annual taxes at the end of the year with like your actual profit from writing, then you can either get a refund on your estimated taxes or have to pay a little bit extra. Personally, I worked with a CPA to determine what my estimated tax payments would be each quarter, and that was based off of my projected annual income for 2025. So let's say that, you know, you kind of know what your advance chunks are going to be and when you're going to get them throughout the year, and you're, you know, my 100K lucky duck 6-figure author example, you know you're going to make 50K off of writing for sure by the end of the year because you have your contract signing, you're going to turn in your book by October, November. So you would guess, hey, I'm going to make 50K as an author by the end of the year, and you and your CPA would determine what that would look like split into 4 tax payments throughout the year. But then let's say you end up missing your deadline and you actually end up making only 25K by the end of the year. You would, one, be in trouble because that's a pretty big difference. Like, you would just struggle a little bit financially maybe for that year, but you would also get back what you overpaid. I personally would rather overpay a little bit and get something back than have to pay extra at the end of the year. So that's kind of what I communicated to my CPA, and we worked on those numbers together, and she gave me these like cool little slips with all the deadlines on them so I know what to pay and when to pay them. But again, it's really just an estimate. The other issue here is that even if you know you're making 50K, you don't necessarily know how much money you're going to spend on your writing business that is going to qualify as a write-off, which would of course lower your amount of taxes owed. So yeah, let's talk a little bit about expenses. We are a business. Businesses do have expenses. It was a really difficult switch for me personally to start thinking of my business as something that I would invest money into, especially because like most of the time writing is free. I mean, of course, there's the initial cost of like a computer that works and maybe like printing stuff off, but like we don't incur a lot of expenses as writers. So I talked to my CPA, I did a lot of research online as well, and spoke to some other writers who have been doing this a little bit longer. I got a lot better at looking for expenses. And you want to do this. It does feel like you are scamming the government and like you're going to go to prison, but you do want to write off as much as possible and be really generous with that. Of course, within reason, like you don't want to write off your jet ski and say it was research. Here are some expenses that I regularly write off and use to help like lower my tax amount. Home office fees. A certain portion of your rent or mortgage can actually be written off if you have a home office, which most writers do. I currently don't rent, but once I do start renting, I am definitely going to write off a good portion of that. This also includes like cell phone bills, Wi-Fi bills, electricity bills. I would look into specifically like how much of that you can write off because it isn't all of it, especially if you're still using your house for other stuff. But I know that, for example, office space is based off of square footage. Like, you can calculate how much of the rent you can write off based off of the square footage of your office. A more simple write-off is anything like tech, office supplies, journals, pens, even anything that you use to write, brainstorm, anything like that. I know I am one of those writers who really loves a nice journal, and I have separate journals for separate things, like my personal journal and also my writing journal, so that's a really easy write-off for me, as well as any keyboards that I pick up. Books count as research, so there is a category of expenses called research. Anytime you read, you basically are learning more from that author, from that story, so any books that you purchase, just blanket write-off. Author-related travel, this one's a little bit more complicated, so I'd recommend saving your receipts, but if you're traveling for research, if you're traveling to go to conventions or a signing or anything like that, a lot of those expenses can be written off. I think it's 50% of any travel meals, and also any like flights, gas, or mileage can be written off if you end up driving, train tickets, stuff like that. Website hosting expenses, for example, a domain name for your author website, very easy write-off. This one is really difficult to argue. You need an author website to maintain your business. Printing off copies, so if you're one of those people that loves to print off a copy through like the B&N printing or anything like that to copy edit or line edit or whatever, that's also a very easy write-off. Advertising, so if you buy your own advertising as an indie author especially, that's an easy write-off as well. That is a very valid business expense. And also, of course, if you are an indie author, cover design costs, formatting, editorial, all of those can be very valid business expenses. Personally, I enter all of my expenses, all of my income into a single Google Sheet separated by year. I set it up to really simply like automatically total my expenses and also my income. I have it set so that I calculate 40% of my income minus expenses to determine like what my estimated tax would be. 40% is obviously excessive. I just like to overachieve, I guess. And I'm incredibly diligent about entering my expenses. That's one thing I'm really proud of and I try to stay on top of. I also am really diligent about like saving receipts and stuff like that. I have a little folder for everything. So if the IRS comes knocking, I know where everything is. I know what I want to show them. I also sort my expenses by category because my CPA asked me to. And categories are generally things like materials. So this would be office space, journals, pens, etc. Like physical materials that I use for my business. Research, which is of course books. I don't know what else. Maybe like subscriptions. So if you're subscribed to Publishers Marketplace or anything like that, that could count toward research. Travel is its own expense category as well, and there are a couple others. There are lists available to you online that you can double check with. And part 3, financial strategies that have worked for me. Caveat here is that it's still very early days for me. Like I said, anything could happen. The IRS could come knocking and arrest me at any moment for some like insane little slip up that I had, and that would be horrible. I would consider myself a relatively financially savvy person. You know, I've also been managing my own taxes and self-employment income for a pretty long time on a much smaller scale as a YouTuber, so I was already relatively familiar with these systems, and I just applied my book money to them. So, stuff that's worked for me. I treat my advance like I won the lottery. I do not treat it as a set salary. I know that I cannot rely on this money coming in this form to me again. Personally, I have no idea if my next advance, if I even get one, will be bigger or smaller than the one I received this past year. So my lifestyle hasn't changed at all. I'm still, you know, I have like a little bit more wiggle room for fun purchases, but I pretty much squirreled most of my money away. I'm not looking to change my lifestyle at all, basically, because it's not a regular paycheck. I can't rely on it coming in every month or even every quarter. I just want to treat it as if it's very special, extra money, and not reliable income, because it is not at that point for me yet. I also hired a reputable financial advisor. So some tips to help find someone who works for you. Look for someone who's fee only, and also local. I think local is important because 1, I know we're in the same time zone and I can like go to their physical office if I need to. And 2, they are familiar with my like state taxes and state quirks. So every state's a little bit different in terms of like taxes and stuff like that. They have also been really helpful with figuring out benefits and stuff for my day job, and I highly recommend working with a financial advisor. Usually their fees are like 1 to 2% of whatever they manage for you. But this was a step that I took myself that was a little bit extra because I knew I didn't want to mismanage my money, and I'm also interested in investing. So I don't know anything about investment. I wanted to work with someone who did, so I hired financial advisors. Number 3, I do think this is non-negotiable unless you are really confident in your tax abilities. I did my taxes alone for years, and then this past year I ended up working with a CPA for my taxes. Mwah. I would die for her. She's perfection. I go to my CPA in person, so we sit there and we look through everything and we talk, and I don't like just email her stuff and trust her to deal with it. Although I would do that as well because I know her now. She's been super helpful with like just figuring out what to do, especially with the quarterly taxes. I think if you're new to quarterly taxes, and I wasn't, and I was still lost, it's incredibly helpful to work with a CPA who can just like break it down, who has seen it 1,000 times. I will say that like, if you can, ask if they've worked with an author before, because author money is a little bit confusing, especially the advances and how they're broken up and like all that stuff. But I do think that actually like there are more authors out there than you'd think, because my CPA had worked with authors and I didn't expect that. So I really enjoy working with my CPA. She makes life so much easier. Honestly, she only costs like $100 or so a year, and it's absolutely worth every penny to me. Number 4 was putting aside a set percentage, non-negotiable, of my advance into a separate high yield savings account with no fees. I will also call this a HISA. I personally chose Capital One for my HISA. I was previously with Ally and then switched off of them. I went with 40% of my total advance to put aside for taxes. This is overkill, but I just like to have it aside. I like to have the cushion, personally. And I put it into the HISA because even though that money is going to go away immediately, as it's sitting there, it's generating more income for me, so I get a nice small chunk of change every month, and I can kind of rest peacefully knowing that the money is sitting there, but it's not doing nothing, right? It's still generating some income. Number 5 is putting 3 to 6 months worth of savings into a separate high yield savings account with no fees. So this is based off of advice that my financial advisors gave me, and it was, you know, I told them that it was important to me to have like emergency savings. So we're going to calculate 3 to 6 months worth of expenses and have that sit again in a HISA, a separate one from the tax HISA, and you can like label them or whatever. So again, I know where it is. I can access it at any time in case of emergencies, but it is also generating income. The 6th thing I've done is I have stayed on top of things. Like I am very, very diligent, as I mentioned, about just recording all of my expenses, all of my income, calculating what that 40% chunk for taxes looks like. And again, all of that information is in a Google spreadsheet. I try to be as detailed as possible, and I save all of my physical receipts and paper copies of my financial records. Again, like I update that spreadsheet probably a couple times a week because I just want to stay on top of it. And tip number 7 is to use a separate credit card for all of your writing related business expenses. This isn't mandatory, but I think it just helps create that extra degree of separation. One of the biggest kind of areas of issue in terms of finances for writers is how easy it is for like personal life and business to blend, because writing is like a pleasure activity, and it's very hard for some of us to really treat it like a job or a business. But it is a business, and I think just having that separate physical credit card for your business expenses is going to be really helpful, and also really, really helpful for record keeping. Like if there's anything that slips through the cracks that I forget to return or I forget to include in my expense sheet, then I can just check my credit card record and see, oh yeah, I bought that book in July. Okay, and finally the 8th thing I did was I just kept a separate account for my fun money. I earned this advance. I, worked hard for it. I think I deserve to enjoy it, so 15% of every paycheck I get just goes into my checking account, and I do whatever I want with it. I don't think too hard about what I'm spending it on. I'm enjoying my income. Okay, I think that pretty much covers it. So that is the end of this video. If you have any financial tips of your own, please drop those in the comments below. Again, none of us are financial experts except for those of us who are. All sorts in the YouTube comment section. I hope that we can help each other out. And especially if you're an indie author and you have some tips, please let others know in the comments, because I always feel really bad that I can't give advice to indie authors because I just don't know anything about that world. But if you got to the end of this video, feel free to drop a little $sign in the comment section below. Thank you so much for watching, and have a wonderful day. And if you like this video, you know what to do. Thank you so much for watching, and have a wonderful day. Bye.